In money matters, declines in the rand have continued in May. The currency is down sharply against the US dollar, hitting a new record low along the way. The downward trajectory comes as headline inflation in April dropped to the lowest level in almost a year at 6.8%, but still above the upper limit of the Reserve Bank's target range. Viv Govender is the portfolio manager at Rand Swiss, and he joins us now for the very latest market moves. Thank you very much, Viv, for your time this afternoon. How are we looking at midday trade?
The market is a bit lower, not dramatically so, but I think this is basically as more and more tension builds up over that U.S. debt ceiling and other economic worries globally. I think that is something that I think we need to be watching out for. I mean, it is definitely a self-inflicted wound, the debt ceiling debate, but it doesn't mean that it won't basically damage our economy and the global economy as well if some of the U.S. politicians manage to actually have the U.S. default on their debt.
So, as we mentioned, inflation fell to 6.8% in April this year, but it still remains above the upper limit of the Reserve Bank's target. Let's take a look at the data, and you can give us clues, perhaps, about what this says about the Central Bank's Monetary Policy Committee's rate decision tomorrow.
Yes, slightly better than expected. That being said, I mean, one of the real drivers of this was the oil price coming down. It came down to a bit more than expected. That allowed, fuel prices, transport prices to basically come down as well. One bit of bad news is, even though we still have a slight decrease, food inflation really remains quite high. Food and non-alcoholic beverage inflation is at 13.9%. And like I've been telling people, unless somebody gets a 13.9% annual increase, that means food is going to take a bigger chunk of their budget. And in South Africa, with our poor, it's going to make a huge difference in terms of just basically food consumption. Bread and cereals prices were up 20.8% in the 12 months to April. These are the basics that are going to be surviving on. Milk and eggs, basically, we're looking at about almost 14.5%. Again, terrible numbers.
Okay, so the interim profit of food producer RFG Holdings jumped more than 1/3 despite selling lower volumes. What does this tell us?
Well, again, just tying into the previous one, they're making more money by selling less stuff. The way that happens is when prices are high. So let's look, I mean, the food retailers in South Africa are obviously facing a real difficult situation at the moment. RFG is up a little bit today, but, not dramatically. And if you look at just the history, obviously we've seen our share prices come down quite dramatically over the last, year or so. So it's a bit of recovery for the stock, but, it's still down, the last, say, year to date, basically, by about 30%. And again, as we tie that back to the whole food price thing here, the fact of the matter is that you are having revenue go up by, over 7% while you're selling less volumes. That indicates that you are having a situation where, food prices are really increasing quite dramatically.
The central bank in the West African nation of Nigeria is expected to raise interest rates for a 7th consecutive meeting today, especially on the back of the country's planned scrapping of its costly fuel subsidy. Help us make sense of the latest there.
Yeah, look, I mean, the Naira, even though it's weakened, hasn't weakened quite as much as some of its neighbors, for instance. Look at the Syrians, for instance. It's had a far, far harder time. But in terms of the Nigerian economy, obviously we talked about the fact that fuel prices are, coming down. That indicates as well that oil prices are down, and because of the impact of oil on the Nigerian economy, that's quite a big negative for them. The Naira is getting a little lower, and it's going to be continuing to trend a little lower. I think emerging markets, not just the Nigerians, but much of West Africa, much of the emerging markets of the world are going to be facing a very tough time as those high interest rates continue to eat into their fiscal stability.
The luxury goods market was down yesterday and is down again today. Pray tell, what's going on?
Well, one of the things is, of course, the fact that we have seen, quite a strong, recovery in the sector over the last little while. If you look at LVMH, for instance, the share price of that particular company over the last, for instance, say just for its last year or so, is up about almost 50%. And so, yes, in the last, say, couple of days, it's down basically about, say, 6% or so, or 7% in the last couple of days. I think one of that is the fact that we are seeing a bit of a pullback after a massive run-up. Next, we're asking about a weakness, as in Europe and to the US and China as well. The fears of a global recession obviously do mean that people are kind of holding back. But that being said, I've seen reports elsewhere that, the high-income earners, the people that buy luxury goods, are also seeing people that buy, for instance, first-class flights. And we are seeing a number of airliners have to bring some of the bigger planes online because they have to deal with more first-class passenger demand.
Viv Govender, portfolio manager at Rand Swiss, thank you very much for your time this afternoon.